Good evening. This is the Elliott wave update for the S&P 500 for Tuesday, December the 28th, 2021. Well, the S&P did reach 4798 during the Globex session, which again is a new all-time high. And that is where I am now marking the completion point for minute wave 3. And so as I left it yesterday, I thought that the market had completed the minute third wave and would now begin to decline and form a small fourth wave correction. We got a little bit higher high, and now that correction is underway. And I'm going to immediately just bring this down to the 15-minute chart so that we can take a look, because so far it's really holding higher level support. And here again, we can see, let me just kind of open so we can see now even clearer. This is the high of 47.98. And I'm thinking that ABC could be the whole deal, but I'm just not feeling it because of what we now got in return. So possibly this is A, this is B, and we're still going to do a C wave down. Now that makes a lot of sense, but it kind of puts this correction still in place for likely tomorrow's trade day. And I was thinking that because we have such a surge of buyers, that it's either going to keep this fourth wave very narrow and very shallow, or it's just going to extend it out as the selling and the buying continue. Now, what I think should take place right now, and that would just fulfill this whole thing. Let me go out to the 30 so that we can take a peek, is that you can see that we did come down to the 30-minute 50, but I'm going to go back out to the hourly now, because that's the more important in terms of depth of where we are. Now, here I've adjusted the Fibonacci retracement. The most common would be 382 for a fourth wave correction. And it would bring it down into the fourth wave of one lesser degree. So interesting that that sits at 4712, I'm going to call it. And the market barely got to hold at 4770. So it did break the 20, the hourly 20. And again, you can see that up here, broke, but now it's hugging, and it managed to close just right above that hourly 20. So that kept the market pretty much flat after the opening round. And then when we broke it, we recovered, and it held it, broke it, but recovered, broke it, but recovered, broke it, but recovered. So it's hanging out right there. And if it continues, then we likely maybe have done an ABC. We can put a 4 and be looking for this to kind of pick up and start to form an additional 5 waves up. So, and again, if it is the completion of the 4, remember what I'm looking for here is just that 5th wave to finish the whole sequence. And that, I gotta reopen this up a little bit so that I can put it back into where it was. Come on, thank you. Let's go to the 4 hour, and then I'll shift back over to the 1 hour, and then we can be taking a look at our resistance levels. So right now, 4,800 is proving to be a little bit. You can see 1, 2, 3, 4, 5 times it got up there between 97 and 98. Kind of bumped its head, came back, bumped its head, came back, bumped its head, came back, and then finally bumped its head, got to 98, and then came back down. So we need to still allow for the continuation of a 4th wave. If this was just wave A and now we got a wave B, then the C wave is very likely going to bring this down closer to this hourly 50, which right now is sitting at 47.53. And then again, right underneath all of that at 47.45, we have Fibonacci supported 0.236. Now, granted that still is a number that would be acceptable as long as we get an A, a B, and a C. Once that's been formed, the level that where it holds becomes secondary to the actual structure. And again, this buy pressure that has put this up holds back a lot of the selling. And even though we did see some come in, they weren't joined as if the top is in. So that's why I'm continuing to just follow what the Elliott is telling us, and that it's just a wave 4, and that we still have a 5th wave up. Now, where can that 5th wave go? Well, the most common, again, on Fibonacci extensions is that the minor 5th wave would be equal to 62% of the minor 3rd wave at 4,813. And I think we called that zone from like 10 to 15. We got about a $5 zone starting at 48.10 to 48.15. And that would contain it there, should that be the completion point. But from where we're starting, the 5th wave, I really would expect to go beyond that. If this is as deep as this correction gets, even down to here, yeah, the 5th wave, I still would expect more from it, because the resumption of the rally should push us from where we are further than 48.12, 48.13, but it might become just a resistance and we pause, pull back, and then go again. So next up would be 48.54 and then 48.92. So we cannot discount at this point and consider out of the game the possibility that this minor 5 will be equal in lengths to the minor 3, and that Fibonacci level comes in at 49.93. Cannot count that out. So if we have a completion for the wave 4, if it's in and the rally picks up, first of all, we'll get a pretty good sign if we can get ourselves back above 47.98. And once we break to a new high, I pretty much would feel that the 4th wave is in, shallow, however it's going to form, it's done. Now, remember, when I look back at that 15 or 30-minute chart, I could see 3 waves down, excuse me, but then we also had 3 waves up. So again, we just got to play it by ear, excuse me, and see what the market wants to do. So again, for tomorrow, we have the potential for continued drop lower to finish the 4th wave. I have support at 47.53 down to 47.45, I'm going to call it. Kind of an 8-point range there. Once the market excuse me, does finish the 4th wave and starts to rally again, I am looking for it to get itself back above 4,800 and get on up towards 48.12, 48.15. But then ultimately, I do feel that we're going to break and get up closer to 48.54 to 49.94. So we have a very large range once we break. And if we break above 48.92, it's a black hole. And you can see, because there's nothing that we can base it on. So it's just pure Fibonacci levels once we get above there. Excuse me for coughing when I had a sandwich just before I made the update. I guess a piece of it's caught in my throat. In any case, just continue to play it and watch the price action, use your moving averages. And I do not think the rally's over, and we still have a shot at maybe getting a little bit more downside. But as you can see, even from today, it was not real strong. It was more limited. So it didn't really get that far. We dropped, I think, high to low, 28 S&P points. Not that much in terms of what the rally did. So again, leave some space for continued downside. And then the rally should pick up again. And then I'm looking for a clean break above 4,800 and on up into probably this zone up in here, with the potential that we could go all the way up in here. And we'll see how the market and how that 5th wave forms. And that's where I'm going to leave it for today. The next update will be on Wednesday, the 29th.